Hello and welcome. Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is advisor essentials, how to explain the power of the solo 401k to your solopreneur clients. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. So I see we've got one that was already chatted up. So let's field the first question. Again, if there are other questions, don't hesitate to chat those over. So a question from Barry. Thanks for joining, Barry. Thanks for your question. Contributed 16,000 to my solo 401k after tax account. 2 weeks later, rolled the 16,000 to a Roth IRA when the account had $16,050. To generate a 1099-R with my solo 401k, it asks for the amount of the gains. So that transfer from the after-tax account to the Roth IRA needs to be reported on a Form 1099-R. So we handle that as an optional free service for our customers. They just need to submit the form on our website to provide us the information we need, since we don't have access to the accounts, and prompt us to prepare the 1099-R. Just submit it in a timely fashion. So that 1099-R needs to show the total amount transferred to the Roth IRA, as well as the basis, which is the contribution amount, as well as the gains. So on the questionnaire, it's going to ask for the basis. So that's the contribution amount, in this case, the $16,000. And then the gains is the $50. So we sum up those two numbers to show the total amount. And then we also show the itemized portions as required on the 1099-R when we prepare it. Great question. Thank you so much for bringing it. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, today we want to just address a good question that we sometimes hear from advisors, which is how to explain the solo 401k to a prospective solopreneur client who may be looking to hire that person as an advisor. So for purposes of today's discussion, we want to lay down the foundation with eligibility, because of course that's going to be a threshold issue to make sure that the person's even eligible to set up a solo 401k. The benefits of a solo 401k plan for self-employed individuals generally, and then the advanced features and benefits of a truly self-directed solo 401k plan like the one offered by my solo 401k financial. And also as well, just kind of based on our experience, ways to explain it to unlock the understanding for the potential solopreneur client. So I think a good starting point is just simple terms. And so a 401k plan, any 401k plan, is for a business. A lot of people will understand that concept because they may have had a job somewhere where they had a 401k account. So 401k plans generally are for employers. They're for businesses with employees. Now a solo 401k, that's for someone who has a self-employed business. So it's an owner-only business. And a 401k plan is a legal entity. It's technically a trust. So like any legal entity, it's the documents that create it. So in order to be able to access more advanced features, you need to have plan documents that allow and support those more advanced features. So individuals that are eligible because they're self-employed with no employees, so it's an owner-only business, can set up a solo 401k plan generally. But if they want to be able to access the advanced features, like the ones that we're going to discuss today, at least some of the ones that we're going to discuss today, you need to have documents that support and allow those features. So a solo 401k plan from my solo 401k financial ultimately allows the client to put the most money away with the most features, the most flexibility, as well as the compliance support for that solo 401k plan. Now, as I mentioned, we want to lay the foundation with the discussion around eligibility. So a solo 401k plan is a plan for an owner-only business. So when you break it down, you could think of it as two separate requirements. One requirement is that you need to be self-employed. And the way that you demonstrate self-employment is by reporting self-employment activity on your taxes. Now, you don't have to have a formal legal entity. Some folks will say, do I need to have a formal legal entity? Ultimately, the answer is no. We have many, many clients who operate without a formal legal entity, and they're still eligible because they ultimately report earned self-employment income. So if you don't have a formal legal entity, let's say you're a 1099 independent contractor, you operate as a sole proprietor, earned self-employment income is going to be income reported on Schedule C of your taxes. Same thing if your business is a single member LLC that's taxed as a disregarded entity. Earned self-employment income is reported on Schedule C of your taxes. Now, if your business is taxed as an S Corp or a C Corp, earned self-employment income would be the W-2 wages that you receive from the S Corp or a C Corp. Finally, if your business is taxed as a partnership, earned self-employment income is income reported on line 14 of the K-1 that you receive from the partnership. And it goes back to the foundation, right? The 401k plans are for employees, solo 401k plans are for self-employed individuals. So you need to have that earn self-employment income, that employee income, you could think of it, to be able to qualify to set up a solo 401k. Now, the other piece of the eligibility criteria is that owner only piece. So that means that you cannot have any non-owner, non-spouse, full-time W-2 employees. So that does mean your spouse could be working in your business and you would still be eligible to have a solo 401k plan. There could even be other owners of the business that are working in the business as long as they're at least 3% owners, and it would still be considered an owner only plan as long as there's no other non-owner, non-spouse employees really working for any business owned by you or a spouse, if any. So ultimately, the solo 401k plan can be ideal for self-employed individuals such as consultants, realtors, freelancers, and other small business owners. So, and here's a good slide just going over again what we talked about, the difference between a 401k and a solo 401k, where a 401k plan is a retirement plan for an employer, and a solo 401k plan is a retirement plan for a self-employed owner-only business. A 401k plan is a legal entity, so ultimately it's the documents that create it. So in order to access advanced features, you need to have documents that allow for those features. So our documents are automatically drafted to allow for the most features, but also the most flexibility. So they don't require taking advantage of all the advanced features, but they ultimately allow it if at some point the client wants to take advantage of it. Moreover, my solo 401k financial is very compatible with advisors because we don't hold or have access to your money. We don't hold or have access to the client's money. We're neutral as far as where the accounts are opened up at. Ultimately, what we care about is compliance. So as long as the accounts are opened up at a financial institution, a bank or a brokerage, the accounts are opened up under the name and EIN number of the plan. So as part of the onboarding process, we obtain an EIN number that's specifically for the solo 401k that meets the IRS expectation. You'll need to have separate accounts, either if there are different participants, like say a husband and wife that are both working in the same business, both participating in the solo 401k, they would have separate accounts. Or if there's different types of funds, like pre-tax versus Roth versus after tax. But ultimately, what's most important is that those accounts are opened up under the name and EIN number of the plan. So as long as the institution, for example, where you custody at as an advisor, will open up accounts for a third party plan, and many of them do, right? Like Fidelity, Schwab, Altruist, LPL, just to name a few, Pershing, just to name another. As long as they'll open up an account under the name and EIN number of the plan, then that is going to work. That's going to be compatible with our plan. Okay, now we want to turn to some of those features. So one of the top features of a solo 401k plan generally, so if you're speaking at more basic levels with a prospective solopreneur client, right, they may not have significant retirement savings. A lot of self-employed individuals, their income could be irregular. They may be trying to catch up on retirement savings. So one of the great features of the solo 401k is that it has the highest contribution limits for any defined contribution plan that's available to self-employed individuals. And that is because it allows for not only employee contributions, but also employer. And if you have a plan like the one offered by my solo 401k Financial, it allows for voluntary after-tax contributions, which is how you make mega backdoor Roth contributions, right? So in the words of the IRS, when you're self-employed, you wear multiple hats, right? You're both the employee and the employer. So you got multiple buckets that you can fill up. So that's why it has that highest contribution limits for any defined contribution plan available to self-employed individuals. So for example, for 2025, the overall limit is $70,000. And then it's even higher if you're age 50 or older. If you're 50 plus, it's $77,500. If you're age 60 to 63, now you can access the super catch up contribution limits, which could take you up to $81,250. And moreover, if your spouse is working in the business, your spouse can participate in the solo 401k and make contributions based on the spouse's scenario, right? Based on their earned self-employment income, based on the spouse's age, the type of contribution the spouse wants to make, etc. But ultimately, it could open the door to potentially double the contribution capacity because now you have two persons that can make contributions. Now, of course, a lot of the basic plans are going to allow for at least the basic contributions. But if you want to be able to make more advanced contributions, like mega backdoor Roth contributions, the basic plan is not going to support that. But our documents do. And we have deep experience in helping thousands and thousands of clients and their advisors who are looking to make those mega backdoor Roth contributions. So a mega backdoor Roth contribution, that's really a marketing term or an industry term. Technically, what you're doing is you're making a voluntary after-tax contribution, step one. So you need to have a solo 401k plan document that allows for voluntary after-tax contributions, which ours does. And then step two, you transfer those voluntary after-tax funds either to a Roth solo 401k or a Roth IRA. So now they can start to grow with that tax-free growth potential. So again, the foundation is you need the documents that allow for the mega backdoor Roth contributions, which ours do. It's also, of course, going to make sense to work with a provider like my Solo 401k Financial that has helped thousands and thousands of customers make mega backdoor Roth contributions because it is a specific technical process that you need to go through. It is that two-step process. You'll need to have a separate after-tax account before their funds are moved over to the Roth account. Moreover, the transfer from the after-tax to the Roth, that's reportable on a Form 1099-R. We have a form on our website that clients use or advisors submit on their behalf to provide us the information we need to prepare the 1099-R. As long as it's submitted in a timely fashion, we'll handle the 1099-R preparation and electronic filing as an optional free service for our customers. Ultimately, it can be a very attractive opportunity for high income solopreneurs. Of course, it's available to everybody who sets up our plan, but just based on experience, a lot of times those high income solopreneurs are extra attracted to the ability to make those mega backdoor Roth contributions. But you're not just limited to Roth and mega backdoor Roth. Our plan is going to allow for all types. So some individuals want to diversify from a tax perspective, right? They may say, well, let me hedge my bets. Let me make some contributions as pre-tax contributions to reduce my taxable income now for the year for which I make the contribution. But then let me make additional contributions as Roth or mega backdoor Roth contributions. So now I can get some benefit now, some benefit later with that potential for tax-free growth. And of course, our plan will allow for that. Another top use case, an advanced feature that's available under our plan that's not going to be available with your basic brokerage solo 401k plan, is the ability to take a solo 401k loan. And again, it's there. You don't have to take a loan, but if the situation arises and the client wants to take a loan, our documents would most certainly allow it. Now, taking a loan is not considered to be subject to taxes or penalties, even though the individual is withdrawing the money, provided that the plan documents allow it. Check, ours do. It's documented. We provide the loan documents as an optional free service. The loan is within the terms that are allowed and paid back according to the loan terms. So what are those terms? Well, the person is limited to borrowing up to 50% of the balance, not to exceed $50,000. It needs to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. Of course, it's not available in IRAs. It's not even available with your basic plans because their plan documents don't allow it. But the client can have the advanced plan documents through my solo 401k financial, but again, have the accounts at the bank or brokerage of choice, including where the advisor custody is at. The tax credits. This is another great feature of our plan in that it enables the solopreneur to claim $1,500 in tax credits. So this is going to be available for not only new plans that are set up with my solo 401k financial, but even existing basic plans that are upgraded to our plan would now be eligible. The individual would now be eligible to start claiming those credits. So for example, if they upgrade a plan here before the end of the year or set up a new plan with us before the end of the year, they'll be eligible to start claiming those credits of $500 per year for 3 consecutive years when they file their 2025 tax return. Ultimately, these are tax credits, not tax deductions. So it's much more valuable in that regard because it's a dollar for dollar reduction in their tax liability. So that's $1,500 in savings. That's going to more than cover our fees for the first 7 years. We charge $650 as an initial fee. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So even if you added up our fees over the first 7 years, it wouldn't even amount to $1,500. So stated differently, those $1,500 in tax credits are going to more than cover our fees for the first 7 years. Now, we also note that in order to be eligible to claim the credits, the plan needs to include an automatic enrollment feature, which we automatically draft documents to include that feature. Part of that feature is setting a default 3% contribution percentage, but the individual doesn't need to make contributions to be eligible to claim the credit. Why? Because the individual, as the participant, so the solo 401k owner, as a participant in the plan, they have the right to opt out of that default 3% contribution percentage. And just because they exercise their right to opt out of the default 3% contribution percentage doesn't mean the plan doesn't include the required feature to be eligible for the credit. It still does. So therefore, the business is still eligible to claim the credit. There's no requirement to make contributions. The individual can opt out of the default and still be eligible to claim the credits. Expert compliance support. Another great feature of our plan is that we specialize in solo 401k plans, and we provide expert compliance support as an optional free service. For example, once the value of the plan, including the value of any defined benefit plan that might be sponsored by the self-employed business or a related business, once the total value exceeds $250,000, there is an informational tax filing requirement that will apply. The name of that informational tax filing form is Form 5500EZ. So as long as clients or their advisors let us know once the value exceeds $250,000, we'll add their plan to the queue and prepare the 5500EZ as an optional free service. In other words, no additional charge. And we do it under the electronic filing system to make it easy for all parties. In addition, a Form 1099-R Again, an optional free service. Customers just have to let us know in a timely fashion, or their advisors will submit the forms on our website, which are available 24/7, to provide us the information we need to prepare the 1099-R. 1099-R would be needed if funds are leaving the plan, like a distribution or a rollover, or if they're converting within the plan, say from a pre-tax status to a Roth status, or an after-tax status to a Roth status. So like in the mega backdoor Roth scenario. So next steps would be to complete our quick 1-minute application. You can find it easily at mysolo401k.net. Just click on open account and then solo 401k. Once we receive the application and payment is made, we prepare the documents within the same business day. All right, wonderful. Thank you so much for checking out today's session. We appreciate it. We'll give you a moment to see if there's any additional questions or comments. If you're finding this to be helpful, we would really appreciate it if you would like and subscribe. If you like the video on whatever platform you're watching, whether it's LinkedIn or YouTube or X or Instagram, that's going to tell the algorithm so other solopreneurs can find it. So that's going to help others like you find it. If you subscribe, then you'll get notifications of when we go live. We go live every day, so you can find out what we're talking about. You can come and ask questions. So that's just going to help guarantee that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So please don't hesitate to subscribe. We also want to let you know about our community. You're more than welcome to join our community. We have the largest community of solopreneurs, solo 401k owners. We've got over 30,000 members. And that means we've got vibrant forums. We have a library of videos and webinars. So there's a ton of ways to learn and to share the knowledge. So please don't hesitate to join the community. You can do it quickly and easily at mysolo401k.net/my community. All right, well, that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.